Let's check in with Scott Bauer, the CEO of Prosper Trading Academy, who's joining us this morning to help us take a look at this number coming across the wire. And Scott, it looks like it's coming in a little bit below expectations, but I'm noticing that they revised last month's number up a little bit. So this is going to be one of those kind of mixed numbers. It'll be interesting to see how the indices and how markets react. We'll have a full screen here in just a minute, but in case you didn't get a look at the number, Scott, core durable goods orders came in at 0.3%. They were looking for an increase of, well, slightly higher than that. Prior was 0.3, revised up to 0.5. I'm noticing durable goods orders on a month-over-month basis. They were looking for 2.1. Prior 2.3 got revised to 3.2, but this month, Scott, only came in at 0.8%. I wonder if that's the headline number and if we'll continue to see weakness in the indices, as that was clearly a miss.
That's a big miss. That's one of the bigger misses that we have seen out of all the big economic reports over the last few weeks and months here, Ben. What I really want to see is I want to pay close attention. I haven't seen it yet to the core capital goods orders, which you had just talked about, because that excludes defense spending and aircraft orders, and that is really more of a reflection of business demand. So let's see what that number is. But that headline number is clearly a miss.
Okay, I've got it here. Durable was excluding defense at 1%. Prior was 2.8. That got revised up from 1.7. And as we look at goods orders non-defense ex air month over month, again 0.5%. Prior was 0.1, revised up to 0.5. So for the most part, it does look like the revisions were higher across the board here. Again, as mentioned, there you can see the numbers here, Scott, and again, for the most part, yeah, a bit of a disappointment across the board. Now, interestingly enough, this is another one of those data points or concerns, I guess I should say, for U.S. investors that the market seems to be shrugging off. We're still lower on the day, but we're only down by about 0.2%. And I've been pointing out all morning to our viewers, Scott, I'm sure you'll remind us as well that, well, we just came off those all-time highs in the indices. We're talking just yesterday, 3 of the 4 majors, everything but the Russell posted new all-time highs.
Absolutely. So, we always talk about, Ben, one number here,
yeah,
but we're starting to see this trend here. There's a clear trend that at least the numbers that we're seeing across the board is showing a slowing of the economy, that maybe we have topped out. And you know what? I'm going to be the one to say it here. Maybe Powell and the rest of the Fed, maybe they've been right for the last months and year, that, this massive increase, this massive inflation that we've seen
wouldn't last forever.
Exactly. So, what are they going to say? What's he going to say tomorrow? Probably not too much, other than, well, we still are sticking to our guns that this is transitory, and that word is so overused. But next month meeting at Jackson Hole is really where we're probably going to see any sort of direction of what they're doing. But you know what? For right now, Ben, maybe we have to give them a little credit. And there are a lot of pundits out there. There are a lot of people out there that say, Fed doesn't know what they're doing.
Yeah.
I don't know. I'm in their camp right now.
Well, I've been joking around saying Powell's got his feet up on a desk somewhere right now, and he's, well, about to light a cigar, basically.
He just did.
Let's talk about the inflation data that's coming out later on this week, because that's going to provide further insight and maybe even as closely watched as GDP. Certainly a lot of focus on second quarter growth. But obviously, again, with the Fed dialed in on inflation and labor, this is going to be a closely watched number. I think it's Friday, personal income and spending.
It is. And in GDP, the number, the print is actually supposed to be off the charts, close to 10%, somewhere between 9 and 10%, I believe. Which, if we get that number, people are going to look at that and say, oh, no, inflation's not gone. It's we're going as fast as we can here. But I don't know. Everything else is pointing to that we have, I don't want to say topped out, but absolutely slowing. So that is going to be a big number. And if that number is lower, if that number even comes in at a 7 handle, let's say, which is still a huge number, boy, oh boy, Powell is really going to be putting his feet up on the desk.
Yeah, I'm looking at it here. GDP expected to come in almost around 9% here. I think you said 10%, but yeah, expected a little over 8.5%, 9% area, and a wide range there. Let's talk a little bit about markets and what's going on here in terms of rates, and then I want to get your thoughts on the U.S. dollar. But rates losing some of the momentum to the downside. I guess if Powell was right, if his feet are up on the desk, maybe, again, the move that we saw lower was a reflection of that or anticipation of that, and certainly seems like they've had it right, at least losing some of that momentum to the upside. Maybe we can get a little bit more digestive in a bit of a range. We're talking TNX or TYX is what I've got my eye on, recently coming off 2.5% all the way down to 1.8, and the TNX here we can see, I mean, it wouldn't surprise me, Scott, to fall into a bit of a range and see a little bit more digestive trade relative to some of the, achieved or misconstrued kind of trend environment that we had seen recently upside, and then the reversal recently to downside. It seems like both sides got a little bit overdone, I guess is my point here.
No doubt. And that's what the market wants. The market wants to digest the numbers and see more of a consolidated sideways trade, Ben. That would be really healthy for the market. You know, the massive spike up and then the massive sell-off, great for traders, fantastic for traders, not so much really for the health of the market overall. So a sideways trade here, when I say sideways, if we're looking at TNX here, you know, somewhere probably in, you know, settling in the 125 to 140 range. I'll even go a little bit to the higher side here. I think the market would really like that.
We're looking at the weekly time frame here right now and how we're holding right around 1.25% and certainly have hit the brakes here as far as some of that momentum that we had seen to the downside into last week. I mentioned the dollar. I want to get your thoughts, Scott, because speaking of hitting the brakes, from 89, that 90 even support that we had been watching ever so closely, recently rallying up back into the 93.50-ish, well, 93 area, but holding short of 93.50 and getting above key hurdles there. What are you watching in terms of the greenback? Because we've been keeping an eye on currencies like the Canadian, the British pound, Swiss franc, which have been losing momentum to the upside, but yet on the other hand, the yen firmed up some, so it kind of seems to be creating a little bit of a headwind for what the dollar seems to be looking to get above some of these hurdles. Without the yen, though, rallying, I mean, maybe it would have been able to.
Absolutely. And, you know, a few weeks ago, the yen, the Swiss franc, which are those, you know, safe haven, you know, currencies, if you will, they were selling off. They were getting a lot softer, but recently, just over the last couple of days, they are, you know, moving a little bit higher on I think it's on the China sell-off, you know, what we're seeing there. So people, you know, kind of flocking towards that safe haven, if you will. But overall, over the last month or so, there has been some pressure in both of those currencies. In terms of the dollar, boy, that, you know, the 93 to 93.5 area, that is the top of the range that we have seen for a very long time. Are we going to break out? I don't know what the catalyst could really be here to see us break out above that. But if it does, Ben, you can see a massive move up to 95, 96 if it does break out.
I like that here in terms of, again, if we get, let's pull the chart here real quick that I have up, the daily. If we get up above the March highs, end of March highs, the 93.40, 93.50 area, Scott's talking about, it looks like the 95 area, the highs we saw back last fall, and ultimately up and through 95. 50-ish, we're talking levels we haven't seen since the end of the summer last year, July, August, June, July, August levels. Let's talk a little bit about Bitcoin, Scott. Before we let you get out of here, we have to get your thoughts on crypto. There was a lot of attention tied to this, well, rumor that Amazon was going to hire somebody, and a job listing apparently tied to potentially some developments in terms of them accepting crypto. I heard a spokesperson kind of push back on that a little bit yesterday. We've seen a nice rally off the 30,000 level. Key support where the bulls needed to find some support, and ultimately, although we're above and holding those levels, still hurdles above there, much like what we were just talking in terms of the dollar around 93.50. It looks like Bitcoin 42, 45, depending on what you want to call it. Ultimately, they've got to get up above some key levels as well for the bulls to get excited at this point.
Yeah, no doubt about it. And the key level now to the downside, if we were to fall down a little bit, is really around 35 or 34.8 to see if it can hold. But you know, to me, it's still a head scratcher, Ben, that one announcement. And you know, Amazon, biggest company in the world and in major announcement, but that one announcement could make a commodity, any asset class, move the way that Bitcoin did.
20%.
I mean, we moved, exactly. So whether that is the announcement is true, or whether, you know, the spokesperson coming out and saying, no, it's not true, you know, the fact that we could still get a huge market-moving statement really makes this, to me, still very questionable. And I am a Bitcoin bull. I have been a Bitcoin bull. You know, I'll say that here for a long time. but it's more of a trading class at this point than it is investing to me. Now, if that adoption does come out, if Amazon does say, yeah, you know what, we are going to start accepting it, and this is going to be the wave going forward, that absolutely can be the catalyst to see 40,000 and above again. But to me, it's still in a trading range. We have a 30 to, I'm going to even call it 38, even though we touched 40, 30 to 38 range.
Yeah, we were talking Tesla early in the morning. They reported some losses tied to Bitcoin and the decline in price activity. I think they were less than expected, which helped them a little bit. But Scott, certainly a lot to keep an eye on here, and we do appreciate you sharing part of your morning with us to break it down, talking everything from currencies, eco data, the Fed to Bitcoin, and always a pleasure. Scott Bauer, the CEO of Prosper Trading Academy, helping us take a look at what's been going on in terms of some of the cryptos. Now,